Is the housing market going to crash? Is the housing market set to boom? You guys are asking the wrong questions. In this video, I'm going to go over some housing market predictions and, more importantly, how you should be thinking about real estate if you're looking to buy sometime in the near future. Stay tuned. All right, Matt the Mortgage Guy, residential mortgage broker, licensed across the country. Connect with me and my team. Go to greatmortgagebroker.com. In today's video, I want to talk to you about housing forecasts over the next, call it 5 to 7 years, but more importantly, how you should be thinking about real estate as an investment, as a primary residence, however you're thinking about buying real estate. Too many people are looking at it and trying to figure out what's going to happen in the next month, 3 months, 6 months. Real estate, when done correctly, is a long-term play. Warren Buffett doesn't invest in a stock based on what they're going to do next month or even next year. He places his bets and his money into stocks and companies that he believes in for the next decade or multiple decades. That's how I want you to start thinking about real estate, right? And this isn't some pitch as a mortgage broker to be like, buy real estate all the time. There's no bad time to buy. I'm not saying that. But what I am saying is, if you're looking to buy real estate and flip it, or if you're looking to buy real estate and you're moving out of state next year, that's something where the short term would matter. For a vast majority of you, buy and hold investor, it's going to hold on to something for decades. Primary residence, where you might live there for 7, 10, 20 years, you're looking at it incorrectly if you're looking at what's the market going to do in the next 6, 12, 24 months, right? All that aside, I thought this was really cool, and I want to show you these graphs so you can enjoy it with me. Projections for 2030. As much as this is going to sound ludicrous to a lot of people watching, like, why the heck do we care about what real estate's worth in 2030? The vast majority of you, this is more important than what real estate is worth in Q3 of 2023. Even though everybody, and not everybody, but just about everybody, is focused on what's real estate going to do the second half of 2023. Will it go down 4%? Will it go up 2%? I personally, and this is the reason for this video, is to get you to maybe consider, don't care. If I'm buying a piece of investment real estate, I'm looking at the numbers, regardless of interest rate, regardless of, current value, next year's value, what the numbers say as a rental for cash flow, future appreciation, all of the things, right? Like, buy it at 400. Do I care if it's worth 415 or 380 next year? If my cash flow numbers are good, if the rents versus my payment are something that's going to pay me while the tenant pays off my loan? No, right? And so anyway, check this out. I think it's pretty interesting. This is a quick little snapshot of Renofy, a company that put together these projections. Might be a little bit hard to read. That's not your eyes or my eyes. I hope it's not my eyes. It's just as I expanded it, made it bigger, it just became hard to read. This is a projected value in September of 2030. So 7.5 years out, right? For median home prices in these different states. California, $1,048,000. The next slide I'm going to show you is going to be broken down by city. Not all cities are this expensive, but as a whole, it is ludicrous to think of an average home price of over $1 million for some people across the U.S. Unfortunately or fortunately, however you want to look at it, some people own real estate, and it's fortunate that California real estate's expensive. Is what it is, right? A stat that I just read that I thought was interesting was, on average, when you surveyed a bunch of real estate experts, the average over the next 5 years in home price appreciation was about 26%. The most bullish, meaning the ones that were like, real estate is going to crush, we really believe in real estate, they expected as much as 47%. I personally hope that real estate on average doesn't go up by 46% in 5 years. We know we saw crazy 45% gains in some markets in 2 years. Unhealthy, unrealistic, something we don't want. We'd rather have 5% a year. So over a 5-year period, it goes up like 30, right? Most conservative estimates predicted something like a 10% rate of appreciation over the next 5 years, which some would be like, oh my gosh, that's 2% a year. That's nothing. But it's another point to even the most pessimistic people in real estate know that over the long term, real estate is going to appreciate. All right, let's get back to our fun chart. Who else we got in here? Way down at number 50, West Virginia, 128,000. I wonder what that is today, right? If it's 128,000 in 2030, I got to buy some property in West Virginia. Most popular states that we're doing the most business in, obviously California. Who else we got on here where we could do a lot of business? Nevada's a sister state. They're expensive as well. Arizona's hot. Idaho's hot. Man, Idaho is 628. I wonder, like you look at Idaho 2015 versus Idaho 2030, that's probably a 4X or something. They've gone just absolutely bonkers. People moving to Idaho. But this is another example of what some people talk about. Wages continue to increase. Remote working continues to be a thing. There's going to be different areas of the country that are just nice places to live. They're going to see more appreciation than others because people can work remote and kind of live where they choose. Tennessee, they must have some cheap pockets, right? Because we're doing business in Tennessee, and it seems to be more expensive than some of these other states I'm seeing higher up on the list. But $294 for a median home price, and then Texas $343. Of course, there's rural areas that pull that number down. There's the counties. All right, San Francisco County. Oh yeah, just a projected median price of 2.6. No big deal. Holy San Francisco and San Jose. I'm actually of the belief that these actually might come down, right? Because if you can live anywhere and you can work a tech job from Texas or Tennessee or Florida, why in the world would you want to live in San Francisco? Sorry, San Franciscans or Bay Area folks. I don't know. I'm not that far in Sacramento from you guys, but the cost of living being 4X what it is in Sacramento, it would take a lot to pull me over there. But I don't know. Maybe there's some really great things I'm missing out on. Comment down below. Let me know why San Francisco is still such a hot spot. Look at that. Sacramento down number 14, $765. It's getting more expensive. Fresno, California. That one surprises me. Being up there at like $460 for a median home price. Holy moly. Mike Zuber, check you guys out over there in Fresno. It's my buddy who owns some stuff in Fresno. Anyhow, this is projections for 2030. I don't have today's numbers to put against these numbers, but like I said, if you go out there and survey people who are in housing and who are looking at the future value of housing, even the most pessimistic people are going to say it's going to be more expensive in the future. Whether it's 10% more expensive or whether it's 40% more expensive, it's going to be more expensive. So when you're looking at real estate, think about the long term. Don't buy something that's going to stretch you in your budget. If it's a primary residence, live within your means as an investment. Whether the rates are 3%, 6%, or 9%, do the math, know your numbers, make sure that it's an asset that's not bleeding you every single month. And like some of the investors I work with, there's different goals, right? Some want appreciation, some want cash flow. Know what your goals are, know how to match your goals to the properties you're looking for, and then know that more often than not, rents go up. The mortgage isn't going to get any worse if you're in a 30-year fixed rate. All it can do is get better if you refinance it to a lower rate in the future. So generally speaking, over time, rental properties are going to perform better and better. We're not always going to see the great things we've seen over the last 5 years, to be completely honest, where some of my rentals are up 30, 40% on monthly rents, while the payments were refinanced from a 6% down to a 3%. So those got cheaper. Like that's the best of both worlds, but it's possible, right? You're not ever going to choose to go refinance to a higher rate and pay more per month. And very infrequent are you going to be in a situation where you've got to drop rents by 20%. But Anyhow, long-term real estate, that's the kind of investment it is, right? And there's no surprise that 99.9% of millionaires own real estate because it's an asset that appreciates over time. It's a good investment. It's a good place to park your money. That's it. I rest my case. Any comments below where you want to tell me I'm an idiot? I welcome it. Good, bad, ugly. Comments down below. Appreciate you guys. Have a great day. I got 700 videos. So if this one sucks, try that one, or that one. There's probably one that you'll enjoy better.